May profits be upon you. Welcome to another weekly Forex forecast. We are looking at the US dollar index, the US dollar index. First thing, let's go to the top. Let's take out the monthly real quick. Now, I've been talking about this ascending channel and how the price is making higher highs, higher lows. And here we come back to the support side, the support line of the ascending channel. Are we supposed to automatically think that we're going up? No, there is no automatic. Price could just run right through this thing. All right? But we look for clues. We look for signatures on price, right? We look for the signature of price. Here is a signature. Look at this. This is June's candle. The high was taken, the low was taken by July's candle. That is a bullish engulfer, a very a bullish indication. But because it's happening at the support line of the ascending channel, it kind of it kind of tells you, hey man, where the price is about to head on up. All right, but there's a good possibility. The probabilities are it's likely more likely to go higher than lower. That's all. Now, what I like to do is make sure that I look at the range of this candle, being that it just closed from the low to the high. I'm going to put a Fibonacci retracement tool on it. And what I want to see, if I can find it, right? What I want to see is this 50% line. This 50% line, the 50% of this candle range, this candle trading range here, the July candle range. I want to see price come into that. Why? Because there's the above 50% and below 50% of the range. This is the equilibrium, the midpoint. The point is we're looking at premium prices and discount prices. You want to take your longs from below 50 and you want to take your shorts from above 50. All right, from premium. All right, so if price doesn't show much of a retracement because there's hardly any wick there, the next candle you look at as it opens, you look for it to pull back. You look for an impulsive move and a corrective move, an impulsive move, a corrective move. All right, and in this case, the corrective move is this next candle. It's pulling back. You understand? And is it going to pull back to the 50%? Is it going to find support in this area? That's what I want to look at. 61 to 78%, like the Fibonacci retracement tool, between 50 and 78, that's where I want to see if price can find support for higher prices. And the only way we're going to see that is if we go to the lower time frame. Let's go to the weekly. Okay. On the weekly, what do we see? Here, we have a bullish fair value gap, right? Price came into that bullish fair value gap and pushed higher from it. That's the way it normally works. Okay. What am I looking at? I'm looking at this as the CISD. All right. Price pushed past it, came back to retrace to it, and then pushed up from it. I like that. Okay. It's encouraging me to think there is some structure in place for higher prices, right? This on the weekly, this line here would represent the CISD. Had price pushed past this and closed up here, then I would definitely be looking at this as the CISD, the change in the state of delivery. And I'll be looking at price going from bearish to bullish. It would come back to that CISD line, find support, and push up. But that's not what happened. Not exactly. What price did was push past it. And then a quick turnaround, retraced again, push, impulsive move, corrective move. Now I'm looking for a price to come, uh, to find its support there and maybe move higher. All right, because it has already retraced. That's what I'm. That's the point I'm making. If we go to the daily, you'll see this is the wick. All right, this is the wick that we saw on the monthly, and the actually the weekly. I'm sorry, on the weekly went up real quick, went down real quick, and if you notice, we have a fair value gap that price ran through. All right, inverting that bullish fair value gap. Now we have another fair value gap here, another bullish fair value gap here. All right, what I want you to see is that from this low to this high, we have broken structure. That is a market structure shift, a bullish one. That you wait for a price to come back into that breakout area. All right, because this is now our area of fair value. All right, it's also where you would look for a price to find structure that'll allow it to go higher. Now, remember that CISD I had pointed out on the weekly? That's right here. Very close to the 50% of the July's trading range, right? The 50% line I already drew. All right. They're crossing right around the same way. And we have a fair value gap that is crossing right at the 50% line of the fair value gap. So, not just the fact that we broke structure here. We moved up and now we have the retracement. I'm looking for price to find its footing right here. Now, wouldn't it be interesting if I put this Fibonacci retracement tool on here to the high, from this low to this high, all right, of that trading range, and find that the 618 golden ratio runs right through the middle where all those other lines come together at. So we have confluence. We have confluence for of support. Now, price could definitely push back up to the inverted fair value gap and then jam right through here. That could happen. There's no doubt about it. However, what are the probabilities? The probabilities are that 8 times out of 10, this holds. 8 times out of 10, we're going to see price push higher. 8 times out of 10, we're going to get a reaction from this bearish, this inverted fair value gap. We're going to get a reaction of some kind. It might come back down. Might come back down from it a little bit, show a reaction, and then we get past it. We'll see. We'll see. I am cautiously bullish in the US dollar index. All right. This fall only came because of the NFP, only because of those numbers. When you have fundamental news and you have news drivers, it could go the other way. We got CPI coming up after, not next week, but the week after, I believe, and that could bolster price and keep it going higher. But right now, we are in a retracement. We have to see if the retracement ends right here. All right. The B, that's the A plan. All right. The plan A. We're looking for price to find support here with all these confluences. 1, 2, the fair value gap. All right. And we have a higher low here. This would make sense. If this is the protected low hitting the what do you call it? The support line of the channel, of the ascending channel, and we have a higher low, and then we break that high, all right, and we retrace back into it. What are we looking for? We're looking for the next higher low up. That's all we're looking for. And this is the spot you would look for that higher low right here. Does it make sense? Okay. All right. Now we have a reaction. We got to definitely have a reaction from this. See how price gapped up here? It formed a an area of supply, but is it enough to send price back down to these lows here and here? We're going to find out if the uh, fair value gap, the bullish fair value gap, holds at the 50% of, just below the 50% of the trading range of the July candle. Yeah, we're going to find out. It's going to be exciting, but I would like to see it work out, because technically it should. We have a higher high, higher low, higher high. We should see a higher low. If it breaks through, then we're probably heading down towards this low here. But I'm not even getting into that just yet. We'll likely see that this low for sure. All right, so that's it. I hope that you enjoyed this video. Look for the other analysis that I'm going to have after this. I'm doing the Euro USD after this one. Make sure you go and check that out, and I will see you in the next video. Thank you for watching, and do not forget to hit that boost button or the like button, and leave a comment. I always respond to all my comments from my viewers and my subscribers. See you in the next one.